Hey, what's going on, everybody? I just want to drop a quick video. This video shouldn't take very long. Just throwing out some thoughts going into the major decision going on Wednesday, where Powell is scheduled to speak at 2:30 p.m. and they will be releasing the press release at 2 p.m. Eastern time on the rate decision. Now, most likely, it's going to be a 75 basis points, but as you can see, the markets continue to move up here and there in anticipation of some type of pivot. And so in this video, what I want to cover is what history has shown us on the charts and what the potential is for Wednesday's decision. Now, so if you followed me on Twitter, here is the chart that I posted over the weekend in which I talk about the cycles, right, through which the Qs, specifically the Qs have been and the SPYs have been moving through since July and August. Okay, after we had the big run up in June and July, going into mid-August, we pulled back. If you remember, on August 26th, the famous Jackson Hole speech that Powell gave was very, very hawkish, right? And so we pulled back from that. We had a bounce into the September CPI, and everybody thought in the CPI in September was going to be a lot better than prior. But guess what? The public and the majority was wrong again. Back in, let's say, later in September, we had another new low on the Qs because 75 basis points was the decision. And instead of Powell sounding dovish, he was saying specifically that his message since Jackson Hole has not changed. So we took another new low into the Qs, and here we are 2 days before the decision on the rate hikes. So if you look at this chart and compare that to my stochastic oscillators, this is merely suggesting. Now, I'm not saying it's going to come true or not. The market will obviously pump. Powell can sound dovish, but every time we run up into these events, all right, any events leading up to, running up for any Fed catalyst, this is what the market has been doing. We are making more lower lows and lower highs. In addition to that, the stochastic oscillator indicated that this was turning bearish when we were running up here. Okay, this was turning bearish. You can see the crossover here, the bearish crossover here when we had this decision, and up here. And in addition to, guess what? The daily stochastics on the Qs are once again overbought on the daily. If I go to the actual Q chart today, this is as of 2 p.m., 2:12 p.m. Eastern time. You can see the stochastic oscillator on the daily is absolutely overheated and things need to calm down. Now, speculation, of course, is that if you look at the CME Fed Watch tool, you guys can Google this here. Just Google CME Group. There's an 86% chance that we will hear about a 75 basis points hike in about 2 days or so. What's causing almost a kind of a run up and anticipation? A lot of dip buyers and bulls stepping in, defending certain levels like 277, 276 today on the Qs. Is that there's a slight chance of 50 basis points for Powell going into Wednesday, but I don't think that's the case. I don't think they will do a 50 basis points because the inflation based on the latest CPI and also PCE data is that the inflation readings are still pretty high. If we go into December, there's even a chance here of a 50 basis points and a 75 basis points. So you can see the market remains kind of split for December. And this is all due to the Wall Street Journal article that came out about a week and a half ago, suggesting that the Fed will potentially ease and not pause, but ease on the rate hikes going into December. So the market obviously very much enjoyed that kind of news. Any type of easing will cause a pivot, and obviously the indexes and the S&P 500 will pump once again here. So we'll have to see what that decision is going into Wednesday. I do believe it's going to be 75 basis points, and what's going to be the difference maker for Wednesday is absolutely going to be how does Powell sound? If he sounds dovish and that he's open for potential easing. Now, there are going to be political pressures on him, right? The Democrats are seeking re-election. There is global pressure for the Fed to ease up before it breaks something. All right. So that's kind of the argument for a dovish Powell. But if you look at the McClellan oscillator, and this is one that I use quite often here, and this is the daily S&P 500. You got the Bollinger Bands here. We're we're near on the top of the Bollinger Band, and we're chopping it around. It's a pretty much a doji day. But you look at the oscillator, and we are overbought. More so than any other time in 2022. So there is that excitement in the market for that pivot. But if Powell decides to say that his message is not changing from Jackson Hole, then down goes the market. Once again, I do believe that if that's the case, we will see another low on the Qs and the SPY for the year on Wednesday afternoon. So in the meantime, you can see that pretty much today, there's very little action, very little volume. The market is just absolutely waiting for the decision on Wednesday here. So once again, just letting you guys know, this is my feeling. I would obviously love for Powell to be dovish. Okay, it gives us a nice direction, at least in the short term, that we can trade. But if it's hawkish Powell again, guess what, folks? There's going to be a lot of chop going down the downside, because there's going to be support that's going to be held like 254, which is yearly low on Qs and all of that. But we'll see. If you are part of our TRT group, we just trade the day. We trade 5 minutes at a time, and we go from there. Anything macro wise, we worry about it intraday. We worry about it after the day of trading and over the weekend, etc. But so there you have it, folks. That's what I'm thinking over the next couple for this particular rate hike. We'll have to see what the decision is on Wednesday. Again, I do believe it's going to be 75 basis points, but again, it's going to come down to how does he sound. Okay, if he sounds dovish, I do think the market will fly. If he sounds adamant about 2% interest rate, or I'm sorry, 2% inflation rate, which is not going to happen in 2022, but perhaps 2023, then he's signaling more rate hikes, and it's going to be persistent. Perhaps at 5% interest rate going into 2000, or 5% in around 2023 next year. So with that being said, I'll leave you to it.